With the federal election around the corner, there are all sorts of predictions about how this may affect our housing markets in the short term as well as in the long term. So to bust some of those myths, today I'm joined by Dr. Nicola Powell, Chief of Research and Economics at Domain, to unpack her recent report, Busting Myths About Elections in Our Housing Markets. I'm also going to ask her her thoughts about what's happening in the current state of our property markets. So welcome to another episode of the Michael Yardney podcast, where we help investors gain clarity amongst the confusion of all the mixed messages regarding our housing markets so that they can develop the financial freedom they're looking for through strategic property investment and smart money management. So let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Hi, Nicola. Every time an election rolls around, we hear the same predictions. Buyers are going to put their plans on hold, auctions will flop, the winning party is going to determine whether prices boom or bust. But is that really the case? Now, Nicola, I want to ask you about these myths, but before I do, I'd like to get your take on what's currently happening in our housing markets based on the vast amount of information you've got at your fingertips at Domain.
Thanks, Michael. Look, I think it's been a really interesting start to the year because when we think how last year ended, we were seeing quite weak clearance rates and very much a slowing market, really consolidated coming out of Sydney. Prices were declining, and particularly in that premium part of Sydney's housing market. But I think 2025 has been a really interesting changing dynamic. Obviously, the rate cut, we have waited a long time for that to come to fruition. And I think the reality of the rate cut being delivered has started to have an impact on sentiment. And even when you look at the consumer sentiment from Westpac Melbourne Institute, it's now at a 3-year high. And the recent index, which was only released about 10 days ago, it's at a 3-year high and it's increased. It's still negative, but it's only 4% away now from being neutral. So this is a massive change in sentiment. And what we're seeing at Domain is it is filtering through to increased buyer inquiry. And this isn't just a one-off. This has been a consistent trend where buyer inquiry has been rising. And I think there were some investors out there probably already reacting to the fact that they knew that a rate cut was going to come. But I think what it has also done is helped to provide clarity, I think, for buyers out there. We know our housing markets are very much driven by sentiment, and when consumer sentiment is rising, it does play out historically well for our housing markets in terms of increased levels of turnover. But buyer inquiry is higher, and it's higher in all of our cities when you look at how many inquiries we saw now compared to this time last year. The biggest jumps are going to be, we've seen in Brisbane and Adelaide, they're up 23 and 18% respectively year on year. But even Melbourne, Michael, buyer inquiry.
Finally.
But I don't think it's going to surprise you. Up 13% year on year. So I think in a market like Melbourne, it's the rate cut, but it's also the value that's been building in that market.
Yes, most of the commentators are now suggesting that Melbourne, sitting where Brisbane or Perth was 3 years ago, it's got to revert to the mean. But having said that, there's not one Melbourne property market. And we know over the last couple of years, the premium end, the higher end in Melbourne in particular, slowed down. But there seems to be a little bit more interest in that with the weekly Domain auction results, and you can see where they are. So buyers are coming back. So it's really more the confidence rather than the small extra money in your pocket that the rate cut has brought, Nicola.
It is, I agree with that. It is that game changer in confidence. And I think that is what prospective buyers really wanted, is that rate reduction, and just to know that we are now going to see, we're in a rate loosening cycle, and we're expecting another 2 rate cuts this year. We're expecting one in May, and then we're expecting another one in August. And, the difference in borrowing capacity isn't huge, but I do think it is that confidence. It is that sentiment. It is that knowledge that rapid rises to inflation are in the past. And I think we know in the housing market, people delay, they don't change their decisions to buy and sell. So What it may have meant in 2024 is that people just delayed their purchasing and they come to market eventually. And that rate cut, I think, probably changed that confidence and gave them a little bit more positive sentiment to come to market.
Well, buyer and seller sentiment changed much the same time. Having said that, buyers get into the market quicker. Sellers have to take their time to find a selling agent, get a campaign going, then run it for 3, 4, 5 weeks for an auction or shorter, longer for a private sale. Often when the market turns, prices start to pick up because there are more buyers than sellers. Then people seem to worry, Nicola, that, more sellers are coming on the market, but they've forgotten that most sellers are also buyers because they're upgrading or right-sizing. And so it's very likely that activity is going to be stronger this year. But then we're coming up to a period when there's lots of breaks in the first couple of months of the year with Easter, with Anzac Day, long weekends, but also an election looming. And there's some anecdotal evidence, some myths about political uncertainty delaying markets, causing problems. But I know you at Domain have done a lot of research looking back in previous years. So what did you find when you did your research?
There are lots of myths when it comes to a federal election and the housing market. Some of them are true, but most of them are not true. So we had a look at what actually impacts transactional activity. And what we found is that an election itself doesn't necessarily impact transactional activity. What you tend to find is people do avoid scheduling their auction on a federal election weekend, which is understandable. Yeah, but it doesn't necessarily impact the overall volumes that we see because then you get that vacuum effect either before or after the election weekend. What we found, though, is political uncertainty. And political uncertainty is a measure that is released every single month, and it's specific for Australia, and there's global ones and for other countries too. But it gives you a read on and it scans the media around and gives it a measure of uncertainty around policy. And what we found is political uncertainty does impact home buying. And when we've got a high level of political uncertainty, it delays people to purchase a home. And it has been really interesting to watch because when you looked at the beginning of this year, the political uncertainty, you have to remember as well, political uncertainty can occur at any time. It doesn't necessarily mean that it happens during a federal election. January and February were, I would say, middle of the road in terms of the uncertainty in political uncertainty. But what we saw in the most recent month, that was February. In the most recent month, in February, we did see that political uncertainty increase. So that is the one to watch. When we've got an increasing political uncertainty, particularly when it's high, that has a negative impact on people's decisions to buy and sell property.
Well, they don't like making big investment decisions. And I'm talking investment more about homes because in general, the market's driven by home buyers. Investors similarly put off their decisions, but they don't make big financial decisions where there's uncertainty about the economic future or their job future. So that makes sense. And at the moment, there's a number of factors creating uncertainty, including what are Trump's tariffs going to create, what's going to happen with the wars overseas, what's going to happen, which party is going to come in. So you can understand that confidence is dropping a little bit. It'll be interesting to see how it flows on over the next weeks as we head into the election. So it slows down home buyer decisions, but it's really more a delay. Is that what you're saying?
Yeah, it seems to delay it, but it is political uncertainty, not necessarily the fact that we're rolling into an election. And I think there has been periods of time where we have had a federal election, but political uncertainty has been okay. So that hasn't necessarily impacted sale volumes. And what we found is if we put some figures behind it, a 1 point increase in the uncertainty index is linked to a decline of just over 8 property sales. So put that into terms. Remember I said earlier, we saw an increase in political uncertainty from January to February.
Yes.
A 100-point increase. So what that means is the sales that would have occurred over February are going to be about 800 fewer than they otherwise would have been. So I think it's interesting that it impacts that month, but as we say, it delays. We know people don't change that decision. It's a big ticket item, buying and selling a property. They just delay it. So it means that transaction is pushed further down the road.
Well, I looked carefully at your Domain report, which I'll be giving a link to in the show notes here, and it actually showed that it didn't really, you've got a great chart there showing that if you look at the months around the election, it actually didn't really make a lot of difference to the total sales. It was just a little bit more in the timing.
Yeah, it is all about timing. And that's where we see sellers obviously avoiding scheduling their auction on election day, which does make sense. But we see a surge of auction volumes afterwards, and also a rise in the weekend prior. We had on average, it's 124% increase in national auction volumes the weekend after a federal election. But the interesting part here, and look, you would like this, what we found is that clearance rates are slightly higher on the election day compared
I was very surprised by that, Nicola.
Yeah.
So people do run their auctions on election day. And I guess part of the reason is you think that people are probably preoccupied. So I won't run an auction when people have got other things in mind. But those that did got a good result.
They got a better result than if they had auctioned the weekend prior or the weekend after. Obviously, it is much lower auction volumes, but I think it just goes to show that if you do schedule your auction on a federal election day, the outcomes are normally better than the preceding or the post weekend. I think what was the other interesting part is we also had a look at the performance of our housing market, depending upon who was in power, so whether it was Liberal or Labor. Because often you hear, one political party is much better for homeowners, the other political party is much better for first-home buyers. So we actually wanted to see, how do the figures actually represent this? And there was very little separating home ownership and price growth. So what we found is when we looked at the performance of the housing market under a Liberal government, and we took out that COVID time because we know that that was a crazy period of time for price growth. But under Liberal, we found on average houses grew 3.1% and units grew 1.4%. Under Labor, houses grew slightly lower at 2.9%, but interestingly, units outperformed and they saw a 4.5% increase when Labor was in power. So that's kind of that annualized growth. But the other thing that feeds into this is in terms of home ownership rates and first home buyer participation, they are slightly better under a Labor government. And I wonder whether if you link the two, where you've got an outperformance of units under a Labor compared to Liberal, and you've got more first home buyers in the market under a Labor government, most first home buyers will be going to the lower priced properties and therefore units.
I found that information in your report fascinating. So Labor governments helped first home buyers with various grants. Of course, what that does is create more demand. So first homeowner grants or removing stamp duties gets people into the market, but people tend to spend as much as they can. So there's a sort of a bonus to those established homeowners who are selling their properties, their units to first home buyers. But I guess the market keeps turning around. So the conclusion, I think, is that don't believe all these myths. And if you're looking at buying a home, moving house, it really has more to do with where you are in your lifestyle, where your finances are, how comfortable you are with your job. Because at the moment, neither of the political parties have got any major political changes in the wind with election policies. The Liberal government's talking about allowing the use of superannuation. The Labor government's got other ways of trying to help boost the market. But there doesn't seem to be anything major that's going to affect the markets, Nicola.
Yeah, look, I mean, I think home ownership and housing affordability overall is very much in the focus of government and government at all levels, really. Supply, we know, has been a focus for some time. And I think this is the first time I've ever seen such a focus on the supply side. And, as housing experts, we are not necessarily supportive of demand side policies, because what you tend to find if you are activating a certain buyer segment, as we discussed earlier, it does tend to inflate property prices. And the only person that is benefiting from that is somebody who's already established within the housing market. And I think that what we need to ensure is that governments are focused on how they reduce red tape, how they get supply to market, and how we make sure that we build that 1.2 million homes over the next 5 years. Because at the moment, we're not on target for that.
No.
It is interesting because we've got Help to Buy as well. So that Help to Buy, that is obviously a shared equity scheme with the federal government. There is an element, though, we do have policies that are focused on demand and focused on first home buyers. So, I've said a couple of times that this could be the year of the unit for Australia because of affordability barriers, because of that gap between what people can borrow versus where house prices are. And I think that what we could see, particularly with policies like Help to Buy, we are likely to see greater levels of demand for the unit sector because they are more affordable.
Well, both sides of politics are focused on boosting housing supply. The Labor government, as you've said, wants to build 1.2 million homes. It's a target we know we can't meet. The coalition promised to invest $5 billion in housing infrastructure and cut permanent migration by 25%. And again, as we've said, it's going to allow people to access their super. Interestingly, there's no talk about negative gearing. There's no talk about changing capital gains tax. I think the parties have learned their lessons from the past. Don't take those sort of election promises into an election. It's a sure way to lose.
It's a hard one. The negative gearing one is a hard one. I think, let's be real here, that when you look at markets like Sydney, which are really high priced, the vast majority of investors would be negatively geared in a market like Sydney. So the detrimental impacts, I think, on rental supply would be there if we removed negative gearing. I think that, the government more so focused on how to create higher levels of density in our big capital cities and how to deliver supply is going to create a much better outcome, because we don't have enough housing. There are many people that are underhoused, and we've had rapid rates of population growth where building homes has not kept pace. And I think that we really need to focus on that supply side.
Well, I think the housing crisis really is simple. We just don't have sufficient houses, dwellings, apartments to meet demand. But the problem, Nicola, is that the economic viability of building these is a real issue. In layman's terms, I guess it costs too much to build, and the returns just aren't there at the moment for developers. Look, most large-scale developers are saying prices are going to have to increase. New apartment prices are going to have to increase 15, 20, even more percent to actually make them financially viable to take a risk. And big developers, Metricon, came out and said the government needs to supply a wartime response, something to make it happen. But the developers aren't going to take the financial risk unless they can make enough money. There's always more. New apartments always cost more than established, but the gap's too big at the moment. So I can only see new development coming on when established property values increase more. Because at the moment you can buy an established apartment considerably below replacement cost, Nicola. We've been through this stage of the cycle before. Prices of established dwellings are going to pick up, and then developers are going to start taking the financial risk of moving forward. There's lots of buildings going through building approval stage, lots of apartment blocks, but they're not coming out of the ground at the moment.
It is a challenge. I think the viability of projects is hard at the moment. Construction costs are up 40% since pre-pandemic. And, we haven't seen unit prices increase that much. And it was only actually a couple of days ago I was looking at listing prices on Domain, and I was looking at, this was just Australia-wide, I was looking at the average listing price for a new development and the average listings price of an established apartment.
Mm-hmm.
There's a wide gap between them. Obviously, new apartments, as you said, are much higher. So those listing prices are much higher than the established apartments. What was interesting, though, is that gap has started to narrow slightly, but there is still a wide gap. And if you are an Australian out in market, you have, your budget is tight, you don't want to overextend yourself, naturally you are going to gravitate to an established apartment because it's much lower in price. And that is a problem. We've got this demand being steered towards the established market. And I agree, what we do need to see is actually to narrow that gap. Established prices need to get closer to where new development prices are.
Well, I see that as a window of opportunity for investors and home buyers to buy established properties considerably below replacement cost, I guess, with what I'm calling significant intrinsic value. And I think, as we've already spoken, the market is going to move into the next phase of the cycle as a few more interest rate cuts happen later this year or over the next while anyway. That's going to mean that more buyer confidence, more seller confidence, people can take out larger loans. And as demand escalates, prices usually rise and the cycle will move on. Same with the election. Things will go on hold for a little while, and then no matter which party comes into power, the cycle will move on because we're still getting married, we're getting divorced, we're having babies, maybe not in that order, and life goes on and we just need different accommodation.
Yeah, and look, we're starting to see, we know that the upper end of the market leads price cycles, and we know that particularly in Sydney and Melbourne, the men had seen greater weakness. And we always see that the more affordable spectrum of our housing market does tend to hold up better. But what we've seen over recent months is an improvement in these premium areas. Clearance rates have improved and clearance rates are much higher. And I'm talking in some of these locations that are like eastern suburbs, inner west, northern beaches. These are what I describe as auction heartlands. There is a large chunk of sales that happen by auction, more so than out in our more affordable locations. So the fact that we are seeing better outcomes in the auctions market in these locations does showcase that we're starting to see a slow change unravel across our big cities.
Well, typically the higher end of the market starts the next phase of the property cycle. If we look back in 2023, after the price drops of 2022, it was the upper end of Sydney that started, and then it ripples down, and then affordability issues created an issue and people went to the lower end of the market. But yes, all the signs are there that we're now moving into the next phase of the cycle. Going to look forward to having these regular chats with you. I'm going to leave a link to your domain report in the show notes about the election. But I guess the message, Nicola, is if you've got plans to buy a home, to move home, or to buy an investment property, don't get distracted by the white noise. Would that be a fair comment?
Definitely. I am very much a believer of you need to make your property decisions when it's right for you.
That makes a lot of sense. Thank you so much for your time.
Thank you.
Well, I hope you enjoyed my chat with Dr. Nicola Powell, and you understand that there is a little window of opportunity likely to creep up over the next little while regarding people being a little bit nervous regarding the federal election, and people with a long-term focus. And you should always have a long-term focus. They're going to be able to take advantage of this opportunity. Now, before I share my mindset message with you today, 2 reminders. First of all, I've got a bonus waiting for you. If you just go to podcastbonus.com.au, I've actually got a group of ebooks and reports waiting for you as my way of saying thank you for subscribing to this, following this podcast, podcastbonus.com.au. And there's one other reminder I'd like to share with you before we discuss the mindset message that seems to be very popular. I get lots of comments about it, and it's that now we're getting to decision time. You've heard me talk about Wealth Retreat for quite some time, but life is short, and I've found that procrastination is the thief of dreams. So it's important to make good decisions quickly and leverage your most precious resource, which is time. Property investing lets you use both financial and time leverage to acquire streams of income, so you don't need to, in the future, trade time for dollars. But in the short term, you do the work once each deal, and you reap the capital growth and the cash flow benefits in the long term if you do it right. Build a big enough property portfolio of the right assets, and over time, your wealth, and then eventually your passive income is going to grow. It's a great formula, but there are ways of outperforming the averages and doing it faster and better. And that's why I'm recommending you join us at Wealth Retreat 2025 at the beginning of May. It's not too late, and please don't count yourself out, because when you join us, I'm going to help you create your future and make the next 5 years the best 5 years of your life. Because the theme of Wealth Retreat is where you're going to be in May 2030, in 5 years' time. It was specifically designed so you not only get a concentrated version of everything the faculty knows about property, tax, finance, property development, but also you're going to have a great opportunity to network with a group of successful movers and shakers. And the result is you're going to go home with a holistic plan for the next 5 years of your life, not just in property and wealth, but in 7 different areas of your life. So could be the breakthrough event you're waiting for. Don't wait. Time's running out. Register. Go to wealthretreat.com.au. You can't book in. We have a chat with everybody who asks to find out about it so we can make sure it suits you. If you miss this one, you're going to have to wait another 12 months. That's another year of lost opportunity. So go to wealthretreat.com.au. Find out what you're going to miss if you don't attend. Register your interest. It's decision time. You can't put it off for some day. Choose a specific time. Come to Wealth Retreat 2025.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I want to talk to you about something called Solomon's paradox. Look, Have you ever noticed there's a striking disparity difference between your ability to give advice and your ability to take your own advice? It turns out this is actually a well-researched phenomenon. Humans are notoriously good at delivering sound, rational perspective to others, but notoriously bad at delivering those same sound, rational perspectives to themselves. And the phenomenon has even got a name. It's actually called Solomon's paradox. So in today's mindset message, I want to help you understand this and I guess how to escape it. I guess it goes back to the old story of King Solomon. In the Old Testament, King Solomon was the king of ancient Israel who rose to the throne as successor of his father, King David. And King Solomon was known for his incredible wisdom. I remember there was one infamous story where two women are brought to him to settle the conflict over a baby that they both claimed as their own. And King Solomon asked for a sword and says that he will divide the baby, at which point one woman pleads with him and says, no, let the other woman have the child, but do it no harm. And by this reaction, King Solomon knows that this woman is the real mother and gives the baby to her. King Solomon's reputation for providing wise counsel and advice was central to his persona. He was considered one of the wisest men that ever lived. He seemed to be endowed with the divine ability in this regard. But unfortunately, the divine ability didn't extend to heeding his own counsel. I'm told that King Solomon's personal life was quite a mess. Hundreds of wives and partners, obsession with money and wealth, absent relationships with his sons and his children. In short, King Solomon was great at giving advice, but terrible at taking the same advice into account in his own life. Now, I read recently on a blog that researchers at the University of Waterloo used this story to give the name of this psychological phenomenon they observed in their experiments. What they found was when we provide clear, rational perspectives and advice to others, we still sometimes have the inability to provide that same quality of perspective to ourselves. And they then call this falling victim to Solomon's paradox. So how do you escape that? We've all been stuck in Solomon's paradox at one point or another, haven't we? Well, it's simple, really. When you consider somebody else's problems, you're objective, you're rational, you're balanced. When you look at your own problems, you're emotional, you're irrational, you're volatile. And this particularly happens with regard to money, to finance and to properties and how your property market's performing. It's not your fault. You're human, after all. But there are two core strategies you can use to escape the paradox, and this is, I guess, what I want to get across to you in this slightly longer mindset message today. Number one, create space. Our emotional connection to a situation clouds our better judgment. Creating space from the situation through time or emotional distancing is the key to escaping this paradox. Viktor Frankl, who was an Austrian philosopher, and he was a Holocaust survivor renowned for his contribution to existential psychology, had a brilliant framing for the power of space. He wrote some amazing stuff about how he got through the Holocaust. But with regard to this, he said, in stimulus and response, there's a space. In that space is our power to choose our response. Our power is in the space that we can create between stimulus and response. So he said, and I'm suggesting, creating space is the key. So to create a space, pause. Our immediate reaction are almost always emotional, and we take bad decisions. We make bad decisions in the heat of the moment, don't we? So before you make a big decision, just have a pause. Could be seconds, could be minutes, could be hours, could be days. I guess it depends what the reaction is to it, doesn't it? But before you react, before you make a decision, take a pace. Reset. Allow yourself to feel the emotional response. Remind yourself that you're in control of what comes next, and then give yourself that power. And then, only then do you engage with a more balanced perspective in engage in the situation. So my suggestion to you is when you create a space, you win. And the second suggestion is zoom out. The rule of life is when in doubt, zoom out. You live your life entirely zoomed in, don't you? We all do. But this creates challenges as struggles feel bigger than it really is and growth feels smaller than it really is. But by forcing you zooming out, it provides perspective on the natural nature of struggles, and it helps you. I mean, this happens in property as well, doesn't it? If you look at things too much on a micro level rather than on a macro level, you often get upset by what the local government's doing or what land tax is or what the rates are or what the bank has done to you. But if you zoom out and look at the big picture of the fundamentals and where your properties are going to perform, how they're going to perform over the long time, you're going to find that if you take a 10,000 feet view and look at the whole picture rather than look at what's happening at the moment, you're much, much more likely to have a more balanced response to what's going on. So my suggestions to you to overcome this Solomon's paradox, where you may be really good at giving advice to others but bad at taking it to yourself. Don't react quickly. Don't react emotionally. Give yourself a pause. And when in doubt, zoom out, take a big picture view. Remember, why did you first start getting involved in property? Why did you buy that investment? Was it the right decision to make at the time? Creating space forces new perspectives, and the right questions are going to come to you. The right answers are going to come to you, as well as zooming out. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. And I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcast, there are 3 little buttons at the top of the player. Well, just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favorite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?